Welcome to the Investors Trading Academy Economic Calendar of the Week. Each week our news analysts review the upcoming economic events that you should be monitoring during the week. The week will open with the result of Greece's July 5th referendum, asking voters whether they wish to accept creditor bailout proposals. However, Investex suggests the referendum bizarrely relates to the bailout which expired on Tuesday, but in reality it's a vote on Greece's desire to remain in the euro. Greece's continued membership on the single currency depends critically on a yes vote and on the ability for the government of the day to take quick action to alleviate the strains on the bank and financing the deficit. Markets would probably give Greece the benefit of the doubt on a yes despite lingering uncertainties. Meanwhile, although the integrity of the euro as a currency is much more solid than it was 3 years ago, a no would still leave investors scrambling for cover in a flight for safety. Tuesday starts off on an exciting note with the Reserve Bank of Australia interest rate decision and statement. Over the past few months, Director Glenn Stevens has kept markets on edge. In the European session, UK manufacturing output and industrial production data for May will be published. While underlying demand conditions are healthy, strong sterling should continue to weigh on manufacturing growth. Market analysts anticipate total production growth to fall back to plus 0.2%. Despite the pickup in factory output, many think that April's strong growth in oil output will moderate sharply. Wednesday has two prime events. In the UK session, the first solely Conservative budget for nearly 19 years will be delivered by George Osborne. In the US session, traders will see FOMC minutes, which could cause some market volatility. Federal Reserve Chair Janet Yellen emphasized after the U.S. Central Bank's June 16-17 meeting that any decision to lift interest rates from crisis-era lows, widely expected to come this year, would rest on labor market improvement. Yellen said she wanted more decisive evidence that labor markets were healing and that wages would increase beyond their current subdued pace. The Fed is expected by economists to hike rates in September for the first time in almost a decade. Thursday morning, traders will get to see Chinese inflation data, which could cause some volatility in the Aussie and Kiwi or the metal markets. Chinese data has been lackluster as of late. Business deflation still exists, with producer prices down 4.6% over the year, and consumer inflation is well contained, with prices up just 1.2% over the year. Low inflation readings will give the authorities further scope to cut rates if it is decided that more stimulus is required. At the same time, traders will get an update on the Australian employment situation, which will be followed later in the day by the Bank of England rate meeting. The BOE is expected to make no changes. There will be standard data releases in the US, including weekly unemployment claims, and as we close the week, there is little expected on Friday.